Employment taxes really matter because we are living in a very competitive environment. Labour is mobile and increasingly so. So reducing the cost of employment for both Indigenous businesses but also for FDI is really critical to ensure that Ireland continues to be a premier location for talent. So with respect to employment taxes in Budget 2026, KPMG recommends an increase in the entry point to the marginal rate of income tax to align that entry point with the current average wage, which is around €50,000. Secondly, we'd also like to see the introduction of a cap on the earnings that are subject to PRSI. So that would be 75,000 for employees and 100,000 for employers. Lastly, I would say there has been a significant increase in the administrative burden placed on employers from an employment tax perspective over the last number of years. And one thing we would like to see is a shift in the reporting requirements for tax-free benefits provided to employees to a more periodic reporting basis as opposed to the real-time reporting that is currently required. So I think Ireland's ability to remain a premier location for businesses will depend on its success in attracting and retaining highly skilled individuals. In Budget 2026, KPMG would like to see a number of measures that would help in this space. So firstly, we would like to see an extension and enhancement to the Special Assignee Relief Programme, which is due to expire at the end of this year. We'd also be calling out for a simplification and enhancement to the taxation of share-based remuneration. Thirdly, in terms of the fund sector, simplification of the taxation of carried interest would go a long way in terms of attracting key fund managers to relocate to Ireland. And lastly, the introduction of a new incentive to attract top tech talent and research into Ireland.